We will show you how to easily find support and resistance levels, as well as some advanced techniques I use that will take your trading to the next level. So first with the basics, what is support and resistance exactly? Support and resistance are areas where prices reacted to in the past and can potentially react to them again in the future.
Now, there is specific criteria we look for in order to identify support or resistance levels, which we are going to list for you right now. 1. We look for the extreme swing highs and swing lows, meaning the highest and lowest points that price has reached in recent time. 2. We like to look for multiple rejections of an area. The more rejections, the better. 3. We want the level to be obvious, meaning it jumps right out at you. Again, to make this clear, the level should be obvious and it should jump right out at you, meaning you should be able to spot the level right away when looking at a chart. 4. The move away from the area was drastic. 5. The level has acted as both support and resistance, meaning it was respected from both sides. 6. The level was recently respected or formed in a recent time period. Now, this is a very key point. You don't need all the criteria we just listed to make a level support or resistance, but the more criteria that the level fulfills, the better the level. So let's jump into the charts and break down each of these traits. Now, we're going to go through each of the traits we just listed, but more in depth on the charts. So starting with trait number 1, that will qualify a level of support and resistance, which is the extreme swing highs and swing lows, meaning the highest and lowest points that price has reached in recent time. So we look left and you notice price came up, hit and reversed. And this was the highest point the price got to, making it an extreme swing high. Now, same along the bottom, price came down, hit and reversed, and this was the lowest point that price got to in recent time, making this a level of support. As always, we don't jump into trades blindly, regardless of how high or low price is. We always wait for price action. So, to the next trait we look for. Now, trait number 2 that qualifies a level as support or resistance is multiple rejections. And the more rejections, the better. As you can see, price came down to this area on 4 different occasions, and each time it got here, it reversed, giving us 4 rejections and a level of support. So why is this important? Multiple rejections shows that price reacted to this level more than once, meaning traders took action at this level during different points in time. Now to the next criteria we look for. Trait number 3 is very key. The level should be obvious, meaning the level should jump right out at you, and you should be able to spot them right away. So here in the pound yen, you can see the very obvious levels. Price came up, hit and reversed, giving us a clear level of resistance. And again, it is very obvious and you can spot it right away. Same along the bottom, price came down, hit and reversed again. This is very obvious and you can spot it right away. In contrast, here are some minor levels that are not obvious. To the left, you have this minor level here that is not obvious. And then you have this next minor level here that is also not obvious. Minor levels are useful for intraday trading, which we will get into in a future video, but for now, focus on the obvious levels. So why is this important? The more obvious the level is, means that more traders will be eyeing the level, which increases the probability that traders will be taking action at these levels, as in closing or opening positions. Now to the next criteria. Trait number 4. The move away was drastic and significant, meaning not just a small bounce, but an actual reversal. As you can see down here, price moved away from this level drastically. So we have a level of support here. Next, right here, price again moved away from this area drastically. So we have another level. And again up top. Every time price came up, it reversed drastically. So we have another level. So to the next criteria. Trait number 5. The level has acted as both support and resistance. As you can see, every time price got to this level of support, it reversed, before finally it broke through and came back up. The support turned to resistance, and it hit and reversed again, showing that this level acted as both support and resistance. So to the last trait.
as possible. So this brings us to our preferred method, which is drawing in zones like this. This way, it accommodates for the entire area, encompassing both candle closes and wicks. Now, here's the most important point, and make sure you remember this. It doesn't matter whether you draw in lines or zones. Either one works, because you still treat these lines and zones of support and resistance as areas, meaning you are looking for price action to occur in the general area, not at a solid number, line, or zone. So moving on down, we spot this level here, and we draw in a zone like this. Now, you are probably wondering, why did we not accommodate for this point here? So here's a pro tip. Don't draw in massive zones. Draw in a smaller zone that accommodates for the most amount of touches and points. Because let's say you were to draw this big zone here to accommodate for this low here. 1, it looks terrible, and 2, you'll end up confusing yourself with such a large area, as it gets even worse once you start using multiple time frames. So instead, we opt to create a smaller level that accommodates the most levels that it can touch. And then this point here will be deemed a false breakout. We will dive deeper into false breakouts in another video, but the name is self-explanatory because you see this big momentum candle that breaks through support and assume that it will continue lower, but it ends up reversing drastically and faking out all the short sellers. Hence why you see such a big candle that followed the breakout candle. Now, we use time frame confluence to get around false breakouts, but that is something we will discuss in another video. And finally, at the very bottom, you have your swing low, and we just draw in a line. So as you can see, you have a nice clean chart with your key levels, not 100 lines. Again, there are other minor levels in between the levels we have drawn, but for the sake of this video, we're keeping it simple. So let's jump to one more example. Here's the CAD yen. We had a swing high level up top here, and you can draw in 2 lines to accommodate for the candle closes. Again, we prefer drawing zones, so we would do it like this. Moving on down, you have this next level here, and again, you draw in lines like this. Or, again, create a zone like this. Next, you spot these rejections here. Again, we choose the zone. And finally, at the bottom, a question that is asked over and over again is, what is the best time frame for swing trading and for identifying support and resistance levels? So again, here on the daily time frame, you will most likely spot support and resistance everywhere. You have a level up here. You have a level here. Another level here. Another level. And another level. So the problem with drawing in this many lines on the chart is that you have now confused yourself and have cluttered up your chart with lines everywhere. Some of these levels are useful for day trading, but right now our focus is on swing trading. Again, if you can recall from the last video, we want to keep our charts simple and clean. So this is why we use the weekly time frame to find our key levels instead of drawing in all these minor daily levels. So let's jump to the weekly and break this down. Now, here on the weekly time frame, notice how the support and resistance levels you drew in from the daily are not visible on the weekly. So let's go ahead and remove all these daily levels. So here's the key to identifying your dynamic support and resistance levels. Look for levels of support and resistance that are obvious and visible on the weekly time frame. Notice how we have an obvious swing high up here, so we draw it in. Next to the right, another level of resistance, so we draw it in. And along the bottom, we have an obvious level of support. And here are all your dynamic levels. The reason the weekly time frame is important is because you are seeing the big picture, as each candle holds a lot more information and represents all the buying and selling that occurred throughout an entire week. So this is a very key point. You need to understand swing trading before you can understand day trading, as you need to know what is occurring on the big picture and bigger trends in order to understand how to trade the shorter time frames and smaller trends so that you don't get caught. Now let's do this from the top down again on another pair. So here's the pound yen, and again, starting from the weekly time frame. We want to identify our key weekly levels. Along the top, we first spot this obvious level of resistance, so we draw it in. Next, we spot this level here with multiple rejections, so we draw it in. Along the bottom, we have an obvious level here. And finally, another swing low down here. So these are all your key support and resistance levels, meaning the obvious levels that you can spot on the weekly time frame. And now we jump to the daily time frame to further confirm these levels. Here in the daily, you can now see more clearly where the key levels are that we drew in on the weekly. And now all the other levels you can spot on the daily are minor levels. So again, spot your key levels on the weekly, confirm the same levels on the daily, and then look for price action on the daily for possible trade entries at these levels. We will dive deeper into price action entries in an upcoming video, but right now, focus on identifying your key levels on the weekly and using the daily for confirmation and price action entries. So let's do this again on another pair. Here's the pound Aussie, and again starting from the weekly time frame. Along the top, we have this obvious level here, so we draw it in. Moving on down, we have this next level here with multiple rejections, so we draw it in. Again, we spot this level here with multiple rejections, so we draw it in. And finally along the bottom, and swing low with multiple rejections. Plus, we also have our trend line here that connects all the swing lows of this uptrend. Now that we have all our key levels identified on the weekly, let's jump to the daily time frame to confirm these levels. So here in the daily, you can again see how the key levels you drew in on the weekly fall into place on the daily, and leaving out all the minor levels so that you don't confuse yourself. Price is currently pulling back to this key weekly support level here, which is also where the trend line lines up perfectly. So if we get good price action through this candle close, followed by intraday confirmation, there will be a possible trade entry long. So you can also use the monthly time frame to spot key levels as well. Using the monthly time frame to identify key levels isn't a must, because often, since the monthly is such a large time frame to use, you won't be able to always spot levels. But we're going to show you this technique anyways, so that you can use it if you choose. So here in the pound Swiss monthly time frame, we often find that monthly levels can hold more weight to them if used correctly. Also, when you jump between time frames, you'll forget where the level of support or resistance came from. So to solve this, we'll make the monthly support and resistance levels a certain color, in this case green, and then the weekly level will be a different color. Again, starting from the top, we spot this obvious level up here, so we draw it in. Next, we spot this level here, so we draw it in. Moving on down, another level with multiple rejections, so we draw it in. And then the swing low with multiple rejections, so another level. So here we have all the monthly levels drawn in, and we jump to the weekly to further confirm these levels. Now here in the weekly time frame, you can see how the monthly levels fit in. We also have this weekly level here, so we draw it in. Notice how price recently blew right through this weekly level and tapped the monthly level and snapped right back, causing this wick to form. Now I'm going to show you how this played out on the daily. So here in the daily, this was your weekly level we just identified, and this here is your monthly level. Price came down to this weekly level, but no price action occurred, and all we had was this bearish momentum candle that blew right through. Price then continued down to this monthly support level, which is when we finally had a reaction to the level, through the wick sticking out. Now you can take this even a step further through using the 4-hour time frame to further confirm this candle. So let's jump to that. So here in the 4-hour time frame, you had this decent rejection candle of the monthly support, followed by an inside bar.